back to Trading Wars. Thanks for joining me today. I hope you're having a wonderful day. We had some beautiful price action here with the FOMC. I'm going to be breaking it all down for you step by step. We're going to be looking at support and resistance, which is the topic of today's video. I'm going to show you how I really trade it and how to actually make money using this concept, okay? So if you're ready, let's step into the war zone. First and foremost, let me shout out some of the Trading Wars Army members. Let me know where you're tuning in from tonight. Otis in the building. What's going on, brother? Rick's in the building. Javier, what's going on? Bad Indie, Trading Wars Army. STK, Trading Wars Army. Good to see you. Tom B, Trading Wars Army. What's going on? Always Friday. What's going on? Good to see you from Tennessee. Good to see you guys. Who else do we have? K Trader, Trading Wars Army. Mary from Texas. Tushar, what's going on? Kevin, what's going on? Good to see you guys. Okay, so let's begin, my friends. All right. So the first thing that we do each and every day is we have to hit the replay button, and then we'll walk you through step by step everything that happened today and my thoughts. So the first thing that I already have drawn here, guys, and I always tell you to do this, is always draw the previous day's low and the previous day's high. Okay, so here's the low and the high. And what this does is just gives us an idea of where we open. Okay, and you could see today, guys, we opened pretty much right in the middle of the range. And this is a very it's a sign that it's going to be a hard trading day initially, because it means that we haven't trapped any traders, that we're basically neutral. We haven't had any price action overnight that's really pushing us in one direction or not. And that's going to be very difficult for a trader to capitalize on directional moves if we're just going to go sideways. Okay. And then let me just go to my live commentary here from this morning. So I'll walk you through. So I said FOMC announcements afternoon today. Do not force anything. 2 days profitable so far. Don't want to give it back. I will look at the open for a play, but if there's nothing, we'll default back to the triggers. So we just waited here, guys, and I'll show you the triggers later. And we're just chilling, guys, just waiting because we're open in the middle. So I'm not going to take an opening range breakout. As you'll see here, guys, we just chopped for a little bit. And that's fine. Do you see that? So 1, 2, 3, 4, 5. That's 5 candles. That is 25 minutes of going sideways. Do you guys see that? Hit me with a 1. So these are things. It's also important to know when to trade and when not to trade, right? That's equally as important, guys. Definitely. Here we have in the building, CA, Trading Wars Army. Ray Rich, could you help me? I'm taking perfect trades, but losing eventually due to past losses. Sure, brother. That sounds like position sizing. It sounds like you're sizing too heavy on some trades and too light on other ones. Ramon, what's going on, brother? Good to see you, Trading Wars Army. Edwin, Trading Wars Army. Don't forget to hit the like. Thank you. Whiskey Ginger, Trading Wars Army. Silk Heaven, Trading Wars Army. My army is strong. Adriana, Trading Wars Army. Good to see you. All right. So this is, it's you got to know when to go in and when not. So right off the bat, guys, we open pretty much in the middle. I'm not interested. However, we started to make some pushes. Okay. So this was the first Fibonacci leg of the day. So I'm going to go here to the Fibonacci live setups, and you'll see here, guys, that this was the first Fibonacci leg, which was from this high. So let me go ahead and draw it out for you. I'm going to walk you through this. Okay. So obviously we had a push down, right? So there's your push down. Okay. There's your push down. So in the room, we drew out the Fibonacci leg for the members. We go from high to low. So generally we like to get a short up in the 618. Okay. Like this is our sweet spot. But you could see today that we didn't make it that far. We went to the 382. And instead, we went to the 382 and we made a new low. All right. So let me ask you a question now. So if this happens, my friends, what do you do? What do you do from here? Let me ask you. What do you think is the next step here, guys? What should we do here? So let's say we're waiting patiently at 618. It never gets there. What can we do now? Brainstorm some ideas for me. Kobe, does Rich ever utilize extended hours? No, don't use extended hours. I mean, you could, but I try to not overcomplicate things, right? Because it's overcomplication leads to losing money. Very simple. Okay, so what we do now, guys, is we actually look at the reversals. Okay, so we know from the 10% all the way up to the 272 is there could be a potential reversal here. Right? We know that because this is what the extension means. The extension means where can this bear leg complete? So watch this now. Okay, so we pop up a little bit here. Okay, we retest the 382 again, and then we start to roll over. And then we start coming into the extensions. So here's your 10%, okay? And then there's your 0.169 right there. And there is your, right there is your, boom, there's your pop. So you don't have to just use the fibs to get into the initial leg, but I always teach you guys, and I talk about this in my book all the time. You can use the extensions as the areas of reversal, and that's what we're trying to show here in the room. And we're gonna keep adding more descriptions on the charts and stuff to make it a little bit easier because we've only been doing the Fibonacci room, this part, for only a week now. Okay, so we're gonna make it a little bit better. But you could see right here, we came into the zone. You could try your lotto calls right down here, guys, and check this out. Boom. That's it. You see what I'm saying? Like what's the point? Like, what am I trying to prove here? I'm trying to show you this. It's better to try to buy long near the low, right? Versus trying to go short near the low. Do you understand what I'm saying there? And sometimes you're gonna have like things that are aligned differently or whatnot, but from a Fibonacci perspective, we are always trying to get a good deal. And using this concept here, guys, you try your little lottos down here. Okay, you try your little plays down here. And if it doesn't work, you take a full stop. If it does work, look at the upside. Okay, obviously this was FOMC, but this happens too on regular charts. All right. Hit me with a 9 if you followed me there so far. Does that make sense? It's like let's pull up Bad Andy. What's going on, Todd? Trading Wars Army. It's like on a party, you don't want to be the first one there or the last to leave. You want to be fashionably late and leave as it starts to unwind. Exactly. That's a good way of thinking about it. Right. So we had that, guys. And now this brings me back to the topic of support and resistance. Okay. So the Fibonacci. So the two things that I wanted to talk about today was hidden support and resistance, as well as retest V and W triggers. So Kevin, do you take the full stop loss at the low of the previous day? Well, if you're doing options, right? Like if you're doing lottos, then you just take the full risk. So you won't have a stop loss, right? Whatever you put in is what you can lose. If you're doing shares or futures, yeah, definitely like the safest way here is to actually take your stop loss and put it below some of these lower fibs, 618, 786, the 1. Use these as your stop loss. It's very mechanical, okay? So the first topic I was talking about within support and resistance is hidden support and resistance, okay? So for example, if we don't have these Fibonacci lines here, we could just guess and we could look back and we could say, well, maybe a support is here, or maybe a support is here, or maybe a support is here, right? Okay, wait 1 second. No. It's over here. No. It's over here. It's over here. How many times have you seen somebody's chart look like that? Hit me with a 5 if you've seen somebody's chart look like that. And the point of this is it's a hidden support and resistance because it's using the mathematical ratios of the current move. It's a ratio, it's a percentage, right? So what this is doing, let's go back. Now let's get rid of this crap. What this is doing here, guys, is it's looking at 16.9% of this leg down. We're adding that percentage. So let me ask you a question now, from a friend to a friend, from a brother to a sister, a brother to a brother. Listen to me now. If you have $1 billion algorithm, do you think it's going to be programmed with 75 lines like I just showed you? Or would it be programmed based on mathematical functions? What do you think is more likely? I'm talking about percentage. Okay, the first move is 10 points. We add 16%. That is the extension. Here is where the reversal will be. Here is where the algorithm is programmed to sell. And here's where the bull algorithm is programmed to buy. Hit me with a 1 if you were to build it, if you were to build this crazy robot algorithm, would you want it based on percentages that it can follow? Or would you want it based on subjective lines that everybody has their own view? And then don't get me started with these ones now. Because if we start doing this, what are they? If we start doing this one, then we have bigger problems. If I start doing this, then we have a lot of bigger problems here, guys, because then this is impossible, right? So my point is here, guys, is you sit down with me, you have a conversation with me, say, Rich, I want to do this as a business. I say, okay, you want to do it as business. All right. Well, this is what I'm going to do. I'm going to draw 10 lines on a day. And you know what? I'm drawing those lines based on my emotions sometimes because I saw that somebody said the market is going to crash. So I'm going to draw them bearish today. But, maybe tomorrow I'll draw them bullish. Or you'll say, hey, you know what? uh, I'm gonna connect the wicks today, and then tomorrow I'm gonna connect the candles. So do you guys see where the flaw in that strategy is? If we're doing it 100 times, do you understand where the flaw could be in there? Hit me with a one if you get what I'm saying here, right? You don't want subjectivity. You don't want it. Subjectivity is how you can self sabotage yourself, right? Because your mind is not programmed to do this. Your mind is programmed to have a bias. You want to say, hey, I'm bearish, hey, I'm bullish. That's what the mind wants to think. So when you think like that, then you're basically hindsighting on your chart. You see what I'm saying? You're hindsighting. But now, if you can use percentages, if you can use math, now you have something subjective, not non-subjective. You have something that is written in stone. That's why math is such a beautiful thing. I know we all hate math, but it's a beautiful thing because it's laws, mathematical laws. You see what I'm saying? 1 + 1 is 2, right? On this planet. Okay. So the Fibonacci gives us hidden support and resistance, and that is based on math. That's why I like it because, like, we can all see here. Oh, I'm trying to delete my alerts. We can all see here that we have a high of the day, a low of the day. We pull back, and then once this pullback happens, once the pullback happens right here, right? Once that pullback happens, your anchor will not change, right? It will not change. Instead, now these extensions will always be here. And don't get me wrong, I'm not saying they work 100% of the time, but I'm trying to tell you as a friend that this, if you're going to do this 100 or 2, 300, I already took over 200 trades in the year when I add my stock trades and stuff like that. If you're going to do this, right, then do it in a way that is scientific, where you don't self-sabotage yourself. I've self-sabotaged myself before as well. I used to draw bear flag, bull flag, up and down flag, American flag, every flag on my chart. Okay. All right. So there's the fibs, right? So basically today, if this had pulled back a little bit deeper for us, which was right around here, that's where we were looking to get in, but it didn't. That's okay. What we had instead was that reversal. And then from here, we just kind of rallied into the FOMC. So let's do something else here now. Let's go ahead and draw the fib. Okay. Let's go the other way now. Let's draw the fib from the low to the high. Okay. Now this is very important here. So, and I want you to understand why this is important, because this candle right here broke through yesterday's high. Okay. So anytime you have a significant candle like that breaks through the highs, then that's going to be your anchor. So here's your low, here's your high. And notice we pull back. Where's the first stop on this chart? Watch closely now. Let's go down to the 1 minute. Let's watch this closely. We can see it live here. Okay, watch closely now, friends. Please watch this with me. Okay. So we pulled back to the 50 first. We popped. We pulled back to the 618. We popped. Then we made it all the way back down, almost to the stop, so around the 90, and we popped. Okay, we even had a Ragnarok on the 1 minute chart, which is one of our advanced patterns as well. So can you see there the hidden support and resistance? Can you see that there? Can you see how we bounce level by level? It's not always going to be like this, but if you look at it, guys, you could see we come to the level, we shoot a little bit through, algo's loading up, pop up to the other level, come back down, pop up. Do you guys see that? Hit me with a one if you see that. I took that fib rich. It was so much fun. Trading Wars Army. Trading Wars Army. Thank you very much, Adriana. Well done. Right? Hit me with a one if you guys see that. And look. Okay. So you guys see that. All right. So let me go back to the 5 minute chart. Where, okay, answer this question for me now. Where would a normal trader buy here? A normal trader, where would they buy? Where do you guys think? Where would a normal trader buy? Well, a normal trader is going to buy this breakout right here because they learn that when it breaks out of the previous day's high, here's a resistance level. It breaks out, okay, and now we go long. And too many times, this pattern, it will work at some point. Don't get me wrong. Everything is probability. It will work. But too many times, guys, they get caught right here. Too many times. And that's my purpose, is to really be like, all right, try it here. Try it here. Try it here. Put the stop loss here. Try it and just see. See what your profitability looks like when you start doing this, when you start buying these dips. Okay. Or you start shorting into the rips. Just try it and you let me know. Paper trade it. Let me know how your profitability changes. All right. Hit me with an 8 if you follow me there. So that was the hidden support and resistance, which is essentially Fibonacci. Like you're not gonna look here and here and here and expect there to be support, but it's strictly fibs. Okay. So let me get rid of this. And then there's another style of trading that I do that's not related to Fibonacci. Well, it is because it comes from Fibonacci that I created it, but it's something I call trigger trading. Okay. So hit me with a 10 if you're ready for the trigger trade. So I'm going to explain this as well. Okay. So hit me with a 10 if you're ready for the trigger trade. So let me go ahead here to the Discord. Let's go to the trigger trade. So the trigger trade is essentially a level to go long and a level to go short. It's line in the sand. Okay. And we'll go here and we'll go ahead and draw this. So the long was 418.37. Okay. And I'm going to teach you a concept that I call front running. Okay. So there's your long. And let's go ahead and draw the short, which was 413.92. I appreciate you guys for giving me your time. Thank you very much for being here. I'm very happy to be your teacher. I love teaching. Always been a teacher in university and all that, and I really appreciate it. It gives me joy to be a teacher to you. So thank you. Okay. All right. Okay. So there's now we can see this clearly here. We have two yellow lines. One is the high, one is the low. And I created these trigger levels based on many things, but the point is this: it's getting you in a little bit earlier than the actual level. And sometimes it backfires. Sometimes it does. But most of the time, what it's going to help you is to get a better risk to reward, to make more money on your plays. Okay? And what we do here with these guys is these line in the sands, they can be tested multiple times. And I love for them to be tested multiple times. That brings me to the other concept that I want to talk about today, which is when a level is tested multiple times, it generally is more likely to explode. Generally. Okay? And that's a thing that I've learned from trading. So sometimes it's not the first time, but the second time that we knock on that level, that's going to be the one that blows to the roof. And the reason is this: the market will stop run people. It happens to me, it happens to everybody. It will. But the second or third time it comes around for that stop is usually not a stop run. It's usually an actual move. Okay? So let's watch. Let's talk about this. So we started off here at 9:30. And the red line was our short line. So notice this, right? So especially since today was a of FOMC day, I was cautious because I knew that we could just probably just be choppy until the announcement. That's what happened, right? For the most part. So the first time we hit our red line, okay, we actually it broke it and it reversed, right? And that's what I was saying. For these lines, I love when it's twice. So the first time it comes there, it could actually just be act as a support. But the second time we come through it, I want to see it flush. So here's a good example. So the green line was our long. So the first time we came here, we popped down a little bit, consolidated a bit. Then the second time we had a good push up. Okay. But here's the difference now between my style and the general way you learn is that I'm getting in long on the green line. but most people are waiting for the yellow. Okay, so here's the difference now. By time we break the yellow line, I've already made money. Okay, but while other new traders are still getting in on the yellow line, I'm already out. I'm selling to them. Do you understand that? And that's why I created the triggers. Okay, and hit me with a 5 if you followed me there. And just notice, so the second time we hit it, we had a good follow through. It didn't last forever. Okay, and then we came again here, we tagged it, still didn't last forever. But look on this time. Look at this time now. The fourth time around, she's gone. And that's all you need. If you can come here and catch that last one with the same concept, you paid for the month. Or maybe for 6 months. Who knows? Depends on how you size. All right, friends. So that's my lesson for today. So hidden support and resistance and the importance of getting in a little bit earlier into the move. Don't be the one that gets in there last. And I have those trigger levels that I have in my Discord. I change them every few months, guys. They changed. And the way they change is based on the average true range as well as the Fibonacci's in play. Okay? So I switch them up. All right? So somebody answer this question right here for this person. How do you trade with 900 Fibonacci levels? Somebody ask him right here. So we trade like we always talk about. We wait for the 618. Okay? These other levels here, don't get confused. These levels here are targets when we get in here. So when we buy the dip down here, on the way up, these are the target levels. Okay? So the fourth time that we hit the roof can explode. And don't get confused. Don't just think this is because of FOMC. This happens a lot in the stock market. It happens a lot on many stocks. You could just go back and pull up a chart and look at it. Look at a level that's been tested 4 or 5 or 6 times and see what happens when it pushes through that fourth or fifth time. Look what happens on the chart. Okay? All right. Hit me with a 9 if that made sense. But really and truly, the best play of the day was taking the Fibonacci that we called out in the room right here. So right here, this fib right here where we drew the leg, best play was taking the extension. So we go up from here, high to low. Boom, boom, right? And remember the payday extensions, 10%, 0.169. Those are not Fibonacci's. These are ones that I created myself. So those aren't actually fibs. Those are things that I've learned myself. Okay. So check it out. Try it out. All right. So there we go. Tomorrow and Friday, I'm expecting a lot of crazy price action. I'm expecting a very powerful close to this week. And the reason why is if we go back here to this weekly chart, this outside bar we've become outside on the weekly. And I mentioned this a few weeks ago that the bulls are trying for the double bottom right here, right? They're trying for that. And this is the way that they need to defend it with creating an outside week. They definitely need to defend it like this. So I do think the bears are going to try again. They will. A very high chance that the bears are going to try again. Okay? Where will they try again? What we're going to do here, think about this, is we're going to go ahead here. Watch now. We're going to take the Fibonacci from this high and we're going to bring it down to this low. And the bears on a weekly chart, these two zones right here is going to be where they will likely try. It doesn't mean it's going to be a crash, but it does give you a good opportunity to go ahead and get a good risk to reward trade. Okay. So let me go ahead here and draw this 405.02. All right, let's go ahead here and let's post this. Snipping. That. Boom. I want to keep this because I want to make sure that I'm keeping a track of this. So go back in here. Fibonacci at SPY VIP. Weekly Fibonacci setups, 50% and 618. That's going to be good lotto plays for Friday expiry. Good lotto plays for Friday. Oh, I didn't post the damn thing. Oh, let me just add it here. Here we go. So that's where I'm at, guys. I do think there's going to be an attempt here. I don't think it's going to go down that easy. You know, I really don't think so. So I'm going to be watching that for the rest of the week right there. But yeah, otherwise than that, my friends, thank you so much for giving me your time. Is the lotto play for a reversal? Is the lotto play? Yeah, so you're looking for an attempt for the bears to try to short, basically, right here. Because you're coming back into their zone, which is the 50 to 618. So you can just give it a shot. Small lotto, right? If it works, you can make a lot, right? Because remember, the puts are going to get beaten up by the time we're up here. You can make a lot. Probably, if you want to go aggressive, you get Friday. If you want to be a little bit conservative, you get next Friday. Okay. Otherwise than that, like, it's not really worth the risk to reward to be buying calls right now. It's not really worth the risk to reward. Okay. I always think about it like that. Is it worth my money? All right. There we go, my friends. Thank you very much for your time. I really appreciate you being here. Thanks for helping me grow this channel. I just want to keep giving you all the little bits of knowledge that I've learned over the year. Whatever sticks with you, whatever works with you guys, it's your journey, and make sure that you make it yours. There's so many ways to make money in the stock market, and I would love to see you grow. I really would love to see you grow, guys. All right. So please go ahead and comment, like, subscribe. If you leave a comment, you have a chance to win the giveaway that we do every single Sunday. So, you know, it's a pretty good deal there. You put in a comment. Usually we have about 50 to 100 comments. You have a 1 in 50 chance. Man, that's better than the stock market, really, sometimes. You know what I'm saying? Sometimes it's better than some of these plays we take if there's uncertainty in the market. That's for sure. Okay. And what else? Check me out at tradingwords.com if you're interested in what I do. Like I said, we have the Fibonacci room live now where we do just Fib setups. And then my live commentary is always in the morning. Trigger day trades are here. These can be fully automated. Check me out at tradingwords.com. Like I said, grab a copy of the Fib and Options Mastery book if you're interested in the Fibs a little bit more. You can get what you can come trade with us live tomorrow. You get 1 month for free in the room when you grab a copy of the book. Okay. Price on this book will be going up, but I'm keeping it at this price for now because we just launched the room, and I want to show you guys throughout the week like what we're doing in there to kind of show you, you know, if it's a good fit for you or not. Otherwise than that, you can check me out on the main page right here. I really appreciate you guys again. Do you guys want to run some scans? Hit me with a 6 if you want to run some scans, or hit me with a 7 if you want to go to sleep. What do you guys say? 6 for some scans, 7 if you want to go to bed. I don't blame you either way. So what do I see? I see 1 6. Okay, I see a lot of 6. I see a 10. I don't know what that person wants. Okay, so let's begin here. So we'll go to Market Scanner. So remember, because it was a FOMC day, you're not going to really have much inside bars. So let's scan the Nirvana and see if we can find that. So these scanners were created for me by Trendspider, and you guys can get these indicators if you join my affiliate. Just let them, if you're already paying for Trendspider, just let them know you want to join my affiliate. No charge to you, and you get all of my scans. Okay. All right, let's look at some raindrops. Don't really think there'll be much either. Yeah, so UAL, that looks okay. Not too big of a fan with the airlines. But yeah, like all the big boys were yesterday. Nothing really today. Let's look at the Holy Grail. I don't think there'll be any. I don't think there were any powerful outside bars today. There's none. There shouldn't be any. All right. Yeah, so pretty much I don't really see anything too nice on the scans. How do you play midday scans? We post them in the room right here. Midday option plays. So the first thing that we do is we get the list, and then we'll give some entries and stops depending on like if we see particular fibs. It's mostly Fibonacci that I look for. If I don't see a good fib, then I won't really take something, but I try to find me and Derry, we try to find like butterflies and different patterns like that. Okay, Angie wants to look at Disney. Nice outside bar. Earnings coming up, so you got to be careful. A lot of the stocks today did outside bar, but in terms of a trade for tomorrow, you can definitely trade this outside bar. You just have to, be careful that you're going into earnings. So you don't want to put yourself at too much risk. Cost. Oh yeah, so there is one here. Interesting. So this is a Nirvana. This is what I was looking for here. Let's see. Daily inside outside. S&P 500. Current candle. Surprised that didn't pop up here. I'm gonna have to ask them about this. Interesting. Let's do Nasdaq 100. Interesting, guys. I'm gonna have to check with them. S&P Composite 1500. What the hell is going on? Yeah, it's right here. Inside outside. S&P. Okay, I'm gonna get with them and see. I don't know if I'm kind of new to Trendspider. Mostly use Tradingview, but let me know, guys, if you know that. If you see I'm doing something wrong here, please let me know so we could check it out. Yep, not sure. Anyways, back here. So yeah, that's a beautiful Nirvana. I really like that. And then we have cost. We already did that. Microsoft, same thing. Beauty. Spy. We already went through Spy today. And we got PayPal. Yeah, look, these are all Nirvanas. I'm not sure why it didn't pop up. Why is that? Inside, outside. That's right. All right. I'll go and try to figure this out, guys. But anyways, I already have some picks that I'm going to post later. Thanks again for your time. I hope you enjoyed the stream, and I'll catch you tomorrow. Take care.